This video is part of the continuing series on the different options to resolve a foreclosure case. We earlier talked about short sales. This one we're going to focus specifically on mortgage modifications. And this video, like the other ones, focuses on a current theme and the big problem in the context of foreclosure cases. And that is consumers don't get proper advice from an experienced attorney that represents their interests. Throughout the transactions, whether they be short sales or deed-in-lieus or mortgage modifications, unfortunately, far too often consumers are only dealing with bank attorneys or bank representatives or other parties that don't have their interests in mind. And the consequences can be staggering. You see, we're now starting to see all across the country lenders and zombie debt collectors pursuing consumers for mortgage debt that they thought was resolved long ago. We're getting consumers in this office now that are starting to have lawsuits filed. They're going to have wages garnished and have lots of other problems associated with this long ago foreclosure. All of this could have been avoided if the consumer had only got the proper advice of a foreclosure defense attorney that knew what they were doing in that subject matter and specifically knew what they were doing within the community in which that consumer lives. Now, let's talk about mortgage modifications. You've heard a lot of talk in the news, all over the press, about modifications being the resolution of a foreclosure case. And quite frankly, in the vast majority of cases, the modification offers that are out there right now don't do anything but put a Band-Aid over the cancer that is the foreclosure case. And that's because in the vast majority of foreclosure cases where a modification is offered, there's no principal reduction. These modifications are what we refer to as extend and pretend. That is, they'll reduce down the amount of the monthly payment, but they won't do anything at all to reduce down the size of the outstanding debt. And even worse than that, these programs will add in additional debt, add in additional fees. So you got a consumer that's already in debt facing foreclosure. They're put a mortgage modification agreement or application in front of them, and then they're told that this is the proper resolution of the foreclosure case or of the consumer's problems. And in many cases, that's just not true. In many cases, that modification can make it much, much worse for the consumer. And here are a couple of examples why. You know, we spend all of our time in the courtroom, and day after day, I see cases where consumers are just walking through the walk of shame, as we call it in the courtroom, the walk of shame, because they're just agreeing to a consent to judgment and walking away from the case. Without having that case properly reviewed by a foreclosure defense attorney, that consumer doesn't know but that they could have ultimate defenses that could result in that case being dismissed entirely. You see, what a consumer should be doing, rather than considering modification without proper legal advice, is having an attorney review that modification, review the underlying case to make sure that modification is in their best interest. And certainly don't sign anything put behind you by an attorney representing the banks or the banks, because you could be giving away important legal rights that are going to result in a lot of significant financial consequences later.